All right, all right, all right. Let me move this out of the way. Okay, cool. All right, so my name is Gerald Jones, or go by Gerald. I manage investments for federal employees, and I've been doing so for a few years. And so I'm going to go over a few things. So one, I'm going to go over um, I'm going to go over why the federal government is cutting their spending. And I'm going to talk to you a little bit about that. So, first thing is, let's see, where can I have so much to say that's on my mind. So, as I've been managing investments for quite some time, right? Now, because I've been managing investments, I have to follow where the economy is going. So, as you know, we just had the presidential election, right? And I have to pay attention to policies. Why do I have to pay attention to policies? Because I need to know where the money is going. Because I have my clients and my investors that I have to help, essentially in financial planning, where I have to help navigate and get them going the right direction. So that's important because last year, I want to say around April of last year, is when I first started really paying attention to what each candidate was saying. So Donald J. Trump, Kamala Harris. So last year, I was fortunate enough to pay attention to just about all of their interviews, as well as the podcast that Donald J. Trump was doing. One thing that I can say is everything that's going on now is not um, it's not it's not unexpected. It's actually really expected. What's unexpected for me is watching everyone not know that this was going to happen or what's going on, and to not really be made aware of what's going on. And so really you see a bunch of people being reactive instead of being proactive, or essentially really you see a lot of people not putting themselves in the right positions so they can continue to put themselves ahead. So when you look at federal employees in particular, because I work with federal employees, um, I re- it's unfortunate because during the campaign trail all last year, Donald J. Trump, this is what he talked about. This is what he campaigned on. He talked about cutting government spending. He talked about shrinking the size of government and pushing all of the federal employees into the private sector to grow the private sector. He talked about that for a long time. So it makes me really think and wonder when you think about the union representation that federal employees have from their unions and things like that. I almost question, why didn't they have their employees more prepared for this instead of just saying things like, we're going to take them to court, we're going to fight it out through a legal battle, things like that, which is fine. But, and I take some responsibility as well, because even for my clients, my households, I didn't know that they were unprepared as well. I kind of just assumed that everyone knew what direction things were going. But to see the amount of people that just were totally unaware, I'm like, wow, this is that's kind of interesting. So also, I will tell you this too. When it comes to following these policies, especially on the federal level, there's a lot of policies. There's a lot. So it's not that it can't be done, but you really, especially when you're going through an election, excuse me, you really have to pay attention to what each candidate is saying. So regardless of who's in office, you can strategically position yourself so you're proactive instead of reactive. And it's unfortunate for a lot of federal employees. One, I do think we do need to shrink uh, the government. We do need to shrink the government, and we do need to grow the public sector. I don't I'm not really in favor of how it's going because we're still affecting lives, families, things like that. And maybe that could have been done a little bit softer and a little bit more delicately. But none of this is surprising at all. So because of that, I'm going to go over a basic fundamental training or walkthrough of why the federal government is shrinking and why we have to cut costs. Okay. Um, this is something that you can use as a template. So when you're looking at things online and you're hearing about certain things that are going on, you can always circle back to this training that I'm going to go through, and you can use it and apply it, so you can have a better understanding of what's going on. Also, you can see where you fit on the chessboard. So really, this is a game of chess. It's not checkers, it's chess. And so when I go through this, you're going to see where you fit as an investor, as a retiree, as an employee. You're going to see where you fit into all of this so you can know how to move. Okay. Or if you're a C suite executive like a CEO, COO, CFO, etc. Um, so that's what I'm going to go over right now. Uh, so let's jump right into it. Let's see. All right. So federal spending. Okay. Got my window up. All right. So let's see here. See if you guys can see that. And where is my other window? Here it is. Okay, perfect. Okay, so here we are. Let me get rid of this. Hold on one second. All right, perfect. There we go. So I have my view. Okay, cool. So this right here, okay, so let's walk through this. I'm going to give you an example of a publicly traded company. So Microsoft, Apple, Meta, you can use any company, okay? A big company, a small company, you can use a sports team. It really doesn't matter. This is how all companies run, okay? I'm going to give you an example of how a company is ran, and then I'm going to show you how the United States, which is essentially a corporation, I'm going to tie in the United States and show you how the United States is being ran. Okay. So let's take this here. All right. So let's start on the right side. On the right side, you have equity, which is your stock. Let's just use Microsoft. Okay. So you have equity for Microsoft. You have debt for Microsoft. You have the board, the CEO, the management team, right? And then you have the operations. Okay, the company operations, which are really the assets. So this is the baseline structure for every company. Okay, so when I'm evaluating a company, I use the same template. I want you to use the same template. You can use this for companies, for your own employer, so you can know where you sit, so you can see how the flow of the money is going through the business that you work for, and so you can see how the flow of the money is going through the United States, and you can see where you fit on this chart, so you can know who you are and what part of the chessboard you're on. Okay. Okay, so that's that. So we have your equity, debt, the board, CEO, CFO, etc. And you have the company, the operation. So if you work for a company, you're here. You're part of the company operations. Okay, so whether you're an administrative person or a supervisor, things like that. Okay. If you're working at a building, the buildings that the company owns, all of that is a part of the company operations. So for every company, especially publicly traded companies, they need money, right? So the CEO of a company will say, hey, I need some money to grow the company, right? So they will do an IPO, and they'll say who wants to be an investor in this company, who wants shares of stock in this company. So you may say, hey, I'll give you $100, I'll give you $1,000, $10,000, $100,000, okay, to invest in the company. That's one way. It's called equity. So you have equity, you have ownership in the company. The second way is through debt. So the company, for example, Microsoft, they'll say, okay, we need $10 million. And they'll have the public give, they'll have them invest in their debt, which are called bonds, right? So someone will say, okay, I'll give you $100,000 or wherever the case may be. And Microsoft will say, okay, we need up to $10 million. So they'll collect a bunch of money. And then they will guarantee, and they'll say, we'll give you back your money plus an interest rate of maybe 3%, 5%. Some companies are doing 6%. JP Morgan Chase is giving interest payments of about 8 or 9%. Ford, they're giving interest payments of, I want to say 7 or 8, I forget. Okay. But the point is that a company will collect debt. They will collect equity. Okay. That is the revenue, which is also the liabilities, debt and equity. These are liabilities. That is the revenue that comes to the company. That company takes that money and invests that money into assets. Okay. Microsoft will take the money from bondholders, they'll take the money from stockholders, not only stockholders for equity, but also your retirement plans. So in your 401k, when you're investing into things like the S&P 500, within the S&P 500, you have Microsoft. So when you're making those contributions into those funds, and it has different companies, whatever amount of that percentage of your investment is going towards that company, they're still collecting that money as equity for you to invest in. So you have debt, you have equity. That money then goes here as assets. Now, the folks that are making the decisions on how the assets are operated are the board, the CEO, the management. Okay, CEO, CFO, C-suites, right? The president, the vice president of the company that you work for. They are the ones that are responsible for the operations of the company. Now, when the operations of the company are the assets. So when you look at what's an asset of a company, it are things like the employees. You guys are assets, okay? The buildings that you work in, those are assets, okay? So the goal for management is to take the debt, to take the equity that's been raised, put it here into the assets, and your management, your VP, your presidents, all those folks, that's why they look over you. Management looks over you to make sure that you're doing what you're supposed to do, because the goal is to create a free cash flow, or a better word for free cash flow is profit. Okay. So that's why you have management. That's why you have supervisors. Okay. Also, another thing, if you're an employee and you want a promotion, or you want a promotion, you want a higher pay. One way to get a higher pay is to know how you're creating, um, how you're increasing the bottom line for your department, how you're increasing the bottom line for your company. So if you ever want to increase in pay, if you do your due diligence and you do your research and you say, okay, is what I'm doing productive enough? Is it making a difference within the company? Just about you should be able to negotiate to get a higher pay. Okay. So let's go back here. So let's walk this back step by step. Debt and equity that's raised, that is the money that's raised from the public. The C-suite executives are in control of that money. That money goes towards the assets. Okay. And the assets need to produce a profit or need to produce free cash flow. Once we have free cash flow, that money comes back here to the CEOs, things like that, C-suite execs, and they are now going to decide, is that money going to go back into the business? Excuse me. Is that money going to go back into the business for maybe more research and development, maybe to hire more employees, maybe to expand and go invest in another building? Whatever, if money is going back into the business, it is going back to increase the free cash flow. It's going back to increase the profits. Okay. That's one option. There's three options. That's one. Okay. The next option is the free cash flow will go back to pay off the bondholders, pay off the debts. Okay. So let's say you're a retiree and you invested in bonds and you want to make sure that the company that you invested in is going to give you your 3% back or your 5% or your 7%. One of the things that we're looking at is the company producing a profit? Because if it has a long track record of producing a profit, what that means is that there most likely will continue to pay you out your interest payments when you're in retirement. Or it doesn't even necessarily have to be retirement. But typically folks like that for retirement because the money that they give to the company, like a Microsoft, if it's $100,000, if it's $500,000, Microsoft will say, hey, we'll give you back your $500,000 plus an interest payment of 3%, 4%, 5%, whatever it is. Okay. So bondholders, that's one option for it to go. By the way, the profits can go back into the business and they can go back into paying bondholders as well. They can do one of the two or both of the two. It's up to the discretion of the board and the executives. All right, so that's that. Third way, go back to um, the shareholders in the form of dividends. Okay, so a lot of shareholders, they like dividends, or they will go back and they will purchase shares off of the market, which is called treasury buybacks. I'm not going to go that far back into that. I'm not going to go that far into depth, but essentially what happens is that you have some companies that they'll repurchase their shares of stock. They'll take it out of the market. The reason why that's good for the stockholders is because that increases the value of the stock because you have less shares on the market. So when we produce a profit, it goes in one of three places. It goes back into the company, goes back into paying off the debt holders, goes back towards the shareholders. It can go into all three, two of the three, or three of the three. That's how every business is ran. Now, not all businesses are ran this well, okay? NVIDIA, Microsoft, Apple, Oracle, some of the big players. This for the most part is a common thing. So maybe some smaller companies may have some difficulty doing this, but for the most part, this is how businesses are ran. So let's go into the US. All right. So same system, same setup, right? We have the President of the United States. We have Congress. Okay. They run the country. You also have the Supreme Court, but I didn't put that there because that's more so as like a, if there's an issue, they feel like the if our rights are being broken, you can bring it to the Supreme Court and they can make a decision. But essentially, you have the President of the United States and you have Congress. They run the United States. Okay. Take a look here on the right side. This is what I want you to notice here. So previously, okay, when you're investing in a business, you have stock ownership in that business. But when it comes to the United States, the revenue that comes to the United States are through the form of taxes, right? Federal income taxes, corporate taxes, and you'll see this in a second. Social Security, Medicare taxes. That's the revenue that drives the United States. The reason why that's important is because you don't have any ownership of the money that you pay into the United States, which is through taxes. You have zero ownership, okay? Also, the second way or the next way the United States generates revenue is through treasury bonds. So you have a lot of people that when they're looking for income or where they're looking for a safe haven, right, to invest and to get a good interest payment, they'll take their $10,000, their $100,000, 500,000, whatever the amount is, and they'll invest in treasury bonds because treasury bonds are the safest investment. They are. They're AAA rated, but they're the safest investment essentially on the United States. Okay, that's how they're branded, and everyone receives their interest payments. Okay, so the United States generates revenue through taxes and from bondholders. Okay, now same thing, just like a corporation. Those taxes and those bonds, those are liabilities. That money goes to the assets. The President of the United States decides where those assets should go. Okay. Now, just like a business, like we're using Microsoft as an example, and using Microsoft as an example, Microsoft has they have buildings, they have employees, they have staff, they have management, et cetera, et cetera. So for the United States, the assets are the federal agencies, Department of Energy, Department of Education, Social Security, IRS, right? All of those different agencies, okay? Those are functions of the United States. Now, the president will tell these essentially what these agencies are supposed to do, usually through Congress, but what he's doing today is through executive orders, okay? And so this is what's going on. All of this money here is going through the agencies, and it's supposed to produce a free cash flow or a profit. And the problem is that we are not producing a profit. We are producing a deficiency. We're in the negative. Okay, we've been in the negative for quite a long time, right? So that money is supposed to, go back to the president. He's going to decide if we're going to invest back into federal agencies. If we're going to, we always pay off our treasury bondholders, right? That's a given. Treasury bondholders always get their money back. But the problem is that we're not producing any profit because there's always a deficit. So in order to put money back into federal agencies and or a lot of times pay off bondholders, we have to increase our debt limit. We have to continue to go up in debt. And right now we're at about $36, $37 trillion in debt because the United States is not profitable at all. And actually, if we continue this, the United States could go bankrupt. The reason why this is important is because the more and more we are we're delinquent, or we're not producing a profit, is that we have to increase the debt limit, and this is one of the key things that will drive up inflation. So a lot of times, we've all went through the pandemic. We saw what it was like when inflation interest rates came all the way down, and money was flowing left and right. Homes were being sold, a lot higher than their asking prices, things like that. So we know what it feels like when money is flowing through the U.S. But we also know what it's like when interest rates go up to stop the flow of money going through through the money to stop the flow of money going through the U.S. Right. So the more and more we increase our deficit, that increases interest rates. Now, right now, we've been able to get interest rates pretty low. I mean, we're somewhere at about 3% or so. I mean, it's went up last I want to say either year over year or quarter over quarter, but it's just peaked up by a little bit. But interest rates are definitely a lot lower than they were about a year, 2 or 3 years ago. Okay. So that is what is going on. Okay. So the agents, we're not producing a profit at all. Okay. So there is a deficiency. We're in a deficit every single year. So to tie this in, so I have tax revenue here, right? So that's the thing as well. So when we get money, so from the deficit that we have here, no money goes back to the people. No money goes back to you. Like where it is, like when you're investing in a company like a Microsoft, when they do produce a profit, you get ownership, you get shares of, your shares that you invested, they appreciate. With the United States, it doesn't. Now, Elon Musk just brought a good idea up where the profits that they find from cutting government spending, that they're going to send everyone a $5,000 check. Okay. I'm not quite sure how he's going to do that because it looks like it could be pretty complicated, but at least that's what they're talking about. But the point is so you can have a good diagram so you can understand what is actually going on instead of just, really falling for a lot of clickbait, a lot of things that you're saying online, because this is the fundamentals here. Okay. So as they continue to cut spending, and as they continue to cut spending, he wants to share in some of the money with the U.S. taxpayers. So keep in mind, the folks that are running the United States right now, they're entrepreneurs, right? They're entrepreneurs. So when they're looking at this, they can see it right away. I can see it right away. It's not really difficult. Now, mind you, just because you have entrepreneurs running the country, I still necessarily don't agree with how people are being treated with being let go with their jobs, with the mass layoffs with the federal government. I think that should be done more of a delicate way. Okay, I will say that definitely for sure. But for you to make sure that you and your family are proactive instead of being reactive, this is very, very important for you to understand so you can know how to move over the next few years. Okay. Also, obviously hopefully you can see the importance of this. If you know of any federal employees that need to know that, everyone needs to know this, but here's the thing. Some federal employees are not emotionally ready to understand what this means or what's going on here. So if you feel like they can understand this, that they're emotionally over the trauma that they are experiencing right now, because they are experiencing a ton of trauma right now, and when you go through something like this, it's going to take a little bit of time to heal. And it's going to take time to heal so you can ready to pick up the pieces and get going so you can lead your life. If you are someone that's like, I'm ready to take accountability, take responsibility, what do I need to do to get going so I can move forward? This is here. This is something that you can always circle back to. Okay. All right. So that's that there. So let's look at the numbers. All right. So here are the numbers here. So let's take a look at this. So total receipts. Let's start here. Now, this is fiscal year 2024. So the income and the expenses, the income that comes into the United States and the expenses that goes out to the United States on a yearly basis, their fiscal year is October 1st through September 30th. So these numbers are for fiscal year 2024. So this is for September 30th, 2024. Okay. So right now we are in February. So October, November, December, January, February. So we're 5 months into the 2025 fiscal year. Okay. For concept. But all right. So last year we brought in $4.9 billion. Okay. The U.S. 4.9 billion. That money came from individual taxes, 2.4 billion, social security, insurance, and retirement, 1.7 billion. Okay. So social insurance and retirement. What that is on your paycheck, you ever see something that says FICA taxes or social security and Medicare taxes? Okay. The U.S. collected $1.7 billion. Corporate income taxes. What does that say? $530 billion. Okay. That's for your businesses, your corporations here in the U.S. Excise taxes, $101 billion. Customs duties, $77 billion. So this here, custom duties, those are tariffs. Those are tariffs the U.S. have placed on other countries that want to do business here in the U.S. That $77 billion is less. Excuse me. It is less than 1% of the amount of income that the U.S. generates. The majority of the income that the U.S. generates comes from people like me and you. Okay. And that's one of the main things the administration is trying to fix. We're trying to lower down the amount of taxes that we're paying and increase the customs duties, which are as tariffs. Okay. All right. So custom duties, that's $77 billion. Miscellaneous, I don't know what miscellaneous is other than it's $43 billion. And the state and gift taxes, that's $32 billion. So let's circle back to this. So that's $4.9 billion in receipts. Okay, tax revenue. That is $4.9 billion the U.S. collected in taxes. Okay, hopefully it's starting to put together so that's making sense. All right, let's pull this in here. These are the expenses. So we collected 4.9. What went out? 6.7 billion. Okay, out of that 6.7, $1.4 billion went to Social Security payments. Okay, they are going to cut Social Security. They are not going to cut Social Security for baby boomers and pre-retirees. They're going to cut Social Security for people like me and my age demographic. We're not getting Social Security. This is why. Okay, we have to cut this spending. Healthcare and humane services, okay, $912 billion. Interest payment on the debt. So remember, let's go back here. Treasury bonds, right? The interest payment on those bonds, $882 billion. Okay. Let's see, Medicare, $874 billion. DOD, National Defense, 874 billion. Income security. This is another tie-in with Social Security, 671 billion. Veteran benefits, 325. Department of Education, 305. Transportation, 137, and other 311. Okay, so all of these expenses for the United States, all of the federal agencies, it's all baked in here. Okay, I'm not going to dive into those agencies that are all baked in here, but they're baked in there. So when you go back here, all right, let me go back here. So we have how much we got coming out? 6.7. So we have a deficit. We do not have free cash flow. We have a deficit of $6.7 billion. So in order to put money back into federal agencies to pay off interest payments, remember, no one is getting any money back. That's what they're trying to do. They are trying to give people money back by cutting expenses, about $5,000. But because we're in such a deficit, in order to pay these things, we have to continue to increase the debt limit. So to go from 36 trillion, 37 trillion, at least that's where we're at today. Okay. So we're trying to cut that, we're trying to cut this deficit down. Okay. So that's how that works there. Okay. So hopefully that helps. Now, I'm going to go over this interview that that Trump and Elon Musk had, because now that hopefully you have a better understanding of this basic fundamentals, when you hear them speak versus when you hear someone that doesn't agree with them speak, you can circle back yourself and do your due diligence to say, okay, let me see how this is applicable, right? So let's take a look here. I'm going to go to their interview that they had last night. And that's not that. Let's go back here. Hold on. Let me see here. Oh, yeah. Okay, perfect. All right, so let's take a look at this here. I have a lot of this queued up, and bear with me because we may have to see some commercials. All right, see. All right, so real quick. So on this section here, the reason why I stopped this is because one, again, what's going on with federal employees cannot be swept underneath the rug. Okay. There's a tremendous amount of trauma that they're experiencing. I quite don't know, I don't know yet as far as how it works when you work for the federal government, as far as, when you're told to do something, how you have to comply and how soon you have to comply, things like that. I'm sure there's some sort of responsibility that everyone's aware of, but nevertheless, as far as what they're going through, that's a ton of trauma, things like that, right? I will say this, from the people that I have met, and I tell you, I've met a ton of people, although I never really leave the house for the most part. But I've met a ton of people that have met or interacted with President Trump, whether it's staff, um, whether it's pilots that's flown him to Mar-a-Lago, everyone has said the same thing that Elon Musk has said, and that he's a nice guy, he's a great guy, things like that. Everyone has said, especially the staff that I've interacted with that's met him, they've all said the same thing. Very, very nice. He works, he moves very, very fast, and he doesn't stop. Even the pilot that I talked to a pilot that flew here to Mar-a-Lago, and we talked, I want to say for about 40, 45 minutes. Essentially what happened is that his plane had to get fixed and repaired. And the pilot that I talked to, he flies the owners of Caesar's Palace. So there's two owners for Caesar's, and I guess they have like $100 million jet or so. And he's their pilot. And he had to fly. When Trump's plane went down, I guess for repairs, he had to fly Trump to Mar-a-Lago, and he had nothing but really nice things to say about him as well. Said talked about how he cracked a lot of jokes. He's really, really, a nice, funny guy. And so the reason why I bring that up is because the same sentiment that Elon Musk feels about interacting with them and working with them, and as well as from watching not just the campaign run last year, because I watched Donald J. Trump, I watched Kamala Harris. The reason why it was so important to do podcasts instead of just rallies is because you're able to get to know the candidate on a deeper level. But the same sentiment that that Elon Musk feels about how he's talking about him, when I come across people that's talked or interacted and worked with Mr. Trump, it's the same thing. It's the same thing. It's the same thing. So I wanted to bring that up because that's the experience that I get as well. All right, so I'm gonna slide to, let's go to 404. So I'm gonna just skip to the main points because we're not gonna sit here and watch a whole. All right, so I'm gonna stop that there. So when I go back to this here, okay, when you go back to this here, he said that he is carrying out the duties of what the president wants. So what Elon Musk is doing is that he is uh, looking at all the federal agencies and cutting costs. The reason why I'm bringing this up is because during the campaign run last year, well, towards the tail end before the election, because he really came aboard, I want to say September, October or so. But my point is that that's exactly what he said he was going to do, and he's doing it. And the fact that people are not aware of that, one, it's unfortunate because people really have to pay attention to policies. You really, it's, and you have to really take your time to to listen and watch long form interviews to see what's going on so you can know what direction things are going. Um, which I have to say, it's not easy as well. I also look at the leadership for a lot of federal employees. Um, when you look at different unions, right? The unions have been knowing that this was going to happen for quite some time. And I don't really feel like they did the best job of getting their base prepared. Instead, to me, their preparation was we're going to fight in court. We're going to take it the legal way. Okay, take it the legal way. That's totally fine. That's something that you do want to do. But I think it would have been a better proactive approach would have been of letting people know like, hey, this doesn't go the direction that we want it to go. A lot of people are going to get laid off. A lot of temporary employees are going to get laid off first. Then they're going to work. They're going to start to shrink the government, things like that. Because everything that he's saying right here, um, it, it's happening, and it's not a coincidence at all. Um, so let's see. Let's go scrub this up to the 9.0. All right, so a few things. I'm gonna let some commercials run. Let me get to this spot. Oh, perfect. My last set of commercials. Okay, cool. All right, so I'm gonna let those commercials run, and I'm gonna bring something up here. So let's see here. A few things that were said that are really, really important. Okay. Um, when you look at running the United States of America, you look at what Trump said as the president who's trying to run the United States. These are the assets. What did he say? He said there's several times, I want to say at least 6 or 7 times, that he has someone in place that's getting it done. Okay. He has someone that's in place that's getting it done. Elon Musk is moving very, very, very fast. He's getting things done so far. We don't know how much this is going to continue, at least for the first, it's been about a month because today's the 19th. But at least for the first month, there's been a good amount of savings. We don't know if that's going to continue for the year or if we're just getting a low hanging fruit, things like that. But like he said, he's tech support. One thing now I want you to make sure that you understand if you're a federal employee, so you can make sure that you understand how to move. Because there's two types of federal employees right now. They're the ones that are still experiencing a tremendous amount of trauma. There's a lot of uncertainty. They're confused. They don't know what to do. They really feel bad that they didn't take that buyout, which is a very, very good deal. That buyout was a very, very good deal. A lot of times people didn't take that buyout because of fear things that they were hearing. It's not legal. It's not this. It's not that, which I'm not going to, well, I truly believe people that's taking a buyout, they're going to get paid. The reason why I believe that is because of I watched both candidates through the campaign trail, and I would trust and believe Donald J. Trump than I would Kamala Harris, to be totally honest with you. So, one, there's two types of federal employees. The ones that are experiencing trauma, they're confused, they're not sure what's going to happen, things like that. They're also regretting the fact that they didn't take that buyout, which was a very good deal. I mean, 8 months severance. Now, the IRS employees, they're going to have to work through May 15th because everyone's still filing their tax returns. So they're not going to get a true traditional 8 months off. But everyone else, for the most part, that buyout was a really good deal. So let me circle back in. There's two types of employees. The ones that are experiencing trauma, they're still hurt, trying to put things back together. You have the second set of employees that are taking ownership. They're like, screw that. What do I need to do to make sure I can keep my job, not only keep my job, but possibly move up the ladder. Okay. Understanding this template will help you have the awareness to know if you're keeping up so you can look for something else, right? Because you may say, hey, you know what? This may not be the thing for me. I know I may have missed out on the opportunity of not taking a buyout, right? Okay, I got it. I see what they're trying to do. Let me make sure I keep my options open. Or you may be able to keep up. You may be understand how things are moving. And this template will help you have a good understanding, have the awareness of where things are going. So you can use, so the reason why I'm bringing that up is because he's mentioning that Elon Musk is his tech support. Also, Elon Musk is huge in AI, artificial intelligence. I been I've been doing a lot of research on artificial intelligence in the private sector. Okay, you're going to have a lot of people not have jobs due to artificial intelligence, and it's going to be more of the lower level jobs, things like answering the phones, a lot of 10, 15, 17, like little small basic hourly jobs for now are artificial intelligence is going to take that, right? And typically what happens is that when something new comes into the private sector, it takes a long time for it to get into the government. Artificial intelligence with Elon Musk essentially being the CEO. Donald J. Trump is the president. Elon Musk is the CEO. He is the chief executive officer, COO, right? He is managing and looking at the operations to cut the fat. Okay, he's going to eventually try to get AI implemented to the federal government. That's just the direction things are going. The reason why I'm bringing that up is because if you're that other type of employee and you want to make sure that you're getting ahead and that you're moving up, maybe into upper management, you want to make sure that you can hold on to your position. It's probably a good idea to start learning about AI, language models, um, jumping on chat GPT, making sure that you have a very good, diverse understanding of how to use AI. Okay. If that's you, I would definitely start looking at things like Jensen from NVIDIA. Start watching Jensen. Go on YouTube, pull up some of his keynote talks, go pull up some of his interviews. I forget the guy's name, the owner of ChatGPT. I think his name is Sam Altman, right? Go check out Sam, see what he's talking about. Start to get more diverse into artificial intelligence, because if you can be ahead, because that's what's coming up, right? We're having a conversation about understanding instead of being reactive. We're having a conversation about how to be proactive so you can be further ahead for yourself and your family, so you can continue to be essentially invest and be well off, so you can know where you need to put your hard work and dollars and your money, right? So that's one thing. Let me see where these commercials are at. Hold on one second. All righty. Hold on. Okay, cool. So that's one thing. Okay. So second thing that he brought up. Okay. Elon Musk. Let me pull this down here. He brought up Elon Musk. This is important. I'm going to pivot slightly towards stocks, right? Investing. With Tesla stock in particular, Tesla is currently trading at, I want to say like 350 or so. Let me see. Tesla stock price 360. Okay. Tesla is currently trading at 360. I don't want to go too far down a rabbit hole. But yeah, it's currently trading at 360. Okay. When it comes to Elon Musk and Tesla stock lives and dies the majority of the time based on how the public views and they feel about Elon Musk. Okay. I was telling this to one of my investors about a week ago. Actually, I told him this a few times because he has a lot of shares of Tesla stock, right? And he was asking me if he should sell it. And I said the same thing I'm going to tell you now. Tesla stock lives and dies by how the public views Elon Musk. Okay. Leading up to the election and through the election, Tesla stock shot up. Crazy. Let me show you this on a chart, actually. Let me see here. Hold on. I'm still learning some of these buttons, so hold on. All right. I have the chart up. This is Tesla. Okay. This is Tesla. I want to show this to you. Take a look at this. This was October 2024. This is a weekly chart. Okay. So this is a weekly chart. November 4th. I think the election was November 5th, I want to say. Everyone was so excited for what Elon Musk was doing for the presidential election. The sentiment at that time for Elon Musk was very, very good. Look how much his stock, his company, right? Look how much it jumped. It just took off. You want to know why he's the why he's the richest man in the world? It's because of the public sentiment that he has. Okay. To be honest with you, the product, as far as Tesla, I know Starlink is great. That's awesome. And he has some other products, things like that. Tesla itself, me personally, I wouldn't own a Tesla at all. I maybe would drive a Tesla if I was going from point A to point B. But my point is that Tesla as a company itself, when it comes to Tesla, it's a good car, don't get me wrong. But there's other EV companies that are coming out. When you go to buy a car, it's often delayed, right? When you put an order in, a lot of times it's delayed months, things like that. My point is that the reason why he's doing so well, why he's the richest man on the planet, it's not because Tesla's a big part of it, but it's not because the Tesla cars are just like phenomenal. No, it's because of the sentiment people have for Elon Musk is what's pushing up the stock price. So this is the election. Everyone's excited. Everyone's excited. Everyone's excited. Everyone's excited. Layoffs start, right? Layoffs. They're going to start cutting. January, right? Cutting. You see how it's dropping because not that many people are that fascinated. A lot of people don't like him as much, right? There's still a good amount of people that like him dearly, right? So the reason why I'm bringing this up is because he's in the process of cutting government spending. If he's able to succeed with cutting government spending, he's in the process of rescuing, which I didn't even know. There are people stuck in space in Mars. I don't even know the backstory. I don't know if it's the previous administration's fault, et cetera, et cetera. But if he gets the kudos for bringing these people back from Mars, he's already with Hurricane Helene. I remember that situation because the administration, Kamala Harris, it took them a little while. Oh, that's right. They were giving out stimulus checks of like $1,200, $700 or something like that, which is fine. That's something that they should do something, right? But he went above and beyond, and he made sure that Starlink was down there in North Carolina because people didn't have any power. They didn't have any power at all. And all of a sudden, boom, like the next day, he put his Starlink products down there so people can have internet connection, things like that, so they can communicate because everything was down because of that hurricane, right? I didn't know I guess he may have helped. I guess he helped out during the California fires as well, the Palisades fires and Altadena, things like that. But if he's able to succeed with these things that he's doing, his stock is going to shoot through the roof. So I'm telling you the same thing that I'm looking at myself is that if you want to get in on Tesla stock, you need to do your own research. I can't give you investment advice. Can't do that because I don't know your personal situation. But I can tell you if he's able to succeed doing something like rescuing people, cutting government spending, Giving a $5,000 check back to people by cutting the spending and taking some of the extra money and giving it back to the taxpayers. If he's able to have a good public image through the folks in the US, okay, that is shown when the past has shown that's done a very good job for a stock price. Okay. So something that you may want to make sure that you pay attention to instead of bickering and fighting and complaining, et cetera, et cetera. Okay. Mind you, if you're a government, a federal employee, and you just lost your job and you're trying to figure things out, this doesn't apply. You have to take your time, you have to heal, you have to get through that trauma. But the folks that are not experienced and are trying to, and they're just bickering, complaining, et cetera, instead of bickering and complaining and things like that, these are the things that you need to make sure that you're looking at so you can make sure that your family's further ahead. All right. All right. So let's see. All right. Let me get back to it. Okie dokie. All right. So 32, 13. All righty. Please don't run into a commercial. All right. Boom. Mm. All right. All right, so I'm going to end it there. Okay. Um, you know, if yeah, I know I'm getting used to these buttons. Bear with me. Okay. If let me see something here. If we're able, if he's able to pull $1 trillion, if he's able to cut $1 trillion, you have to ask yourself, what are you going to consider a win for this? Now that I'm really looking at this, this is a $2 trillion deficit. You know, we brought in 4.9. Yeah, here's the deficit, 1.8. 1.8 billion. Okay, okay. Okay. Looking at those numbers now, I get it. Okay, so if the deficit is at 1.8 billion, if he's able to cut $1 trillion, that's a win. That's a win. I know they want to give back $5,000 to each taxpayer. That would be great. I know we want to stop people from paying federal taxes and have tariffs pay that. That would be awesome. If you can bring the spending down by $1 trillion, that's a win. Even if you can stop a deficit every year, that's a $2 billion deficit every year. That's a win. So I wanted to bring that up. The other thing I wanted to bring up is that he mentioned about Social Security, that he's not going to stop. He's not touching Social Security. So that's really important. I have a few, quite a few retirees. Okay, and a lot of retirees are bailing from their retirement plan because they believe that the new administration is going to cut Social Security. And I just want to reassure and reiterate to retirees, my retirees, as well as if you're a retiree and or you're a pre-retiree, you're not going to lose your Social Security or Medicare benefits. It is going to get cut. It's going to get cut for people like me, not for people like you. Okay. The only way they will make changes to Social Security if they can approve it. Same thing, just like health insurance. The only way they're going to make changes to health insurance if they can make it better. So you don't have really anything to worry about. So because here's the thing, when you are a pre-retiree and you're between the ages of 56, 62, 63, you're a young retiree. You have to plan for the next 20, 30 years. And what I'm seeing is retirees are doing certain things to keep themselves below the poverty line. The reason why I say the poverty line is because Social Security has income limits. They have income thresholds. If you make more money, they're going to take Social Security away from you. If you make less money, you can keep Social Security. But what retirees don't realize, and I have a few clients I have to meet with this week and next week and things like that, because we're doing our first year reviews, and I'm gonna have to because this is starting to come up. Uh, we don't want to plan our retirement on having reduced income for the next, because we're afraid that someone's going to take our, we don't want to plan our retirement on having reduced income for the next 20, 30 years or so, because we're scared someone's going to take our Social Security. Because one thing is for sure is that the cost of living is going to continue to increase. And your investments when you are in retirement have to continue to grow. Your income has to continue to grow. Your investments have to, your portfolio has to continue to grow. Okay. because you're not working anymore. You're not taking your working income. You're not saving and investing it. So one of the ways to make sure that your 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 assets are growing, your income is growing, is by delaying and pushing off Social Security. So if you know any retirees that are thinking like, "Hey, I need to take Social Security now because they're going to take it from me," really rethink where you're getting the information from, because you don't want it to make a bad decision that you can't go, that you may regret. And to be honest, when you're in your 70s, um, or pulling up to your 70s, because once you start Social Security early, you're locked in. You can't go back and stop it. Okay, you can only do that after the first year that you started it. But after that first year you started it, you're locked in. You can't make any changes. You're kind of, you're set with wherever things are at. And the bigger problem is that at that point, when you've taken Social Security so early and the cost of living has gone up, you're you're going to be more reliant on the government to do have certain programs, to have certain things done for you to make sure that you keep up with the cost of living. Okay, so just don't let that be a fear factor. I hope this was helpful, uh, so you have a better perspective on what's going on, not so you can continue to bicker and fight, so you can be made aware of what's going on, so you can put yourself and your family in the right position. Okay, so I'm Gerald Jones. I go by Gerald. There's my happy face. um, I love that damn thing. I manage investments for federal employees, federal, state, local governments, as well as private sector employees, business owners also. And have a good rest of the evening.